Okay, everyone, thanks for joining me for the May 2026 housing market update. The spring market that wasn't, that's what we're going to be talking about today, how rising inventory still couldn't overcome buyer hesitation. Don't go away, come in. There's some good information here. We're going to show you why that is. Let's jump right in. Okay, so you'll see from this first slide that listings are actually up in our three-county market here: Passaic County, New Jersey, Sussex County, New Jersey, and Orange County, New York. Those are the three counties that we track very closely, as it's the main marketplaces that we operate in. Units sold on a year-over-year basis are down almost 12%, which is a pretty significant percentage. New listings are up almost 50%. And we're looking at the 30-year fixed rate right now sitting at 6.37, when we had a brief dip back in February, just under 6%. So in truth, the spring market here in 2026 is definitely falling short of expectations. The question is the balance of the year going to be busy enough to make up for the deficit that has been occurring here in the spring? I think those of us that are in the trenches, listing and selling houses, definitely feel it being busier right now. It's kind of an intense busy right now. A lot of new listings coming on and buyer activity going on versus where we were 2 months ago. But it's like the CEO of Rocket Companies puts it, the mortgage market will not see the typical Q2 seasonal uplift. So that's a pretty big company with a lot of influence in this industry and some pretty smart people there. And they're thinking that from a mortgage perspective, there's probably the market's not going to come back to an extent to make up for all the losses in the spring market here in 26. So a little bit of a bummer of a news, but it is what it is. We roll forward, right? Rates remain elevated. However, we're still a touch lower than where we were a year ago. Right now we sit at 6.37 on the 30-year fixed. Last year we were at 6.76. So we're, roughly call it half a point lower than where we were. But again, we're still not below that Goldilocks era of below 6%. That's where we really want to be. Let's move on here. Statewide in New York State, last month we talked about New York State as a whole. I pulled some more numbers this month as well because I think it's a big enough data set where it has regional impact, right? It's not New York and New Jersey together, but close enough because it's a big data set. Again, closed sales are down, which is the bummer, right? I've always said that units sold, closed sales, same thing, is kind of like the number one indicator of the housing market, right? It's not so much about price as it is about movement, right? It's about things moving. And right now things are just not moving. We're at, lows of, if you look back 40, 50 years in terms of the number of transactions that have sold, we're at the lowest level in almost 40 years. And it continues to decline year over year. So that's not a great thing. However, the sales price, median sales price, has been going up, still has not gone down, despite the fact that there's an increase in listing inventory. So the question then becomes, how much longer is price going to hold as inventory continues to build, right? Because if buyers are truly hesitant and affordability is really what it is, and inventory starts to creep up, we're going to have a shift in the supply and demand, right? We're going to have more supply than there is demand. So that's the point at which prices will start to come down. So let's take a look at, how our three counties are performing. We have, 5 different metrics here: new listings, units sold, average sale price, days on market, and sale to ask. And you can see the new listings in Orange County are up 4.5%. A touch, just 1% in Sussex, but up nonetheless. And the largest gain is in Passaic County at almost 8%. However, you can see here in units sold, it's down in every county, more so in Orange than any other. Average sale price, you can see it's continuing to rise, Passaic County, and as you go closer to the New York City market, prices are still increasing at a good clip because of just the pure buyer demand in those areas. So again, you're starting to see new listings come up. Prices are still going up, but that's not always going to be the case. If that continues to happen, at some point, price will shift on the downturn. Days on market, we're sitting at about 65 days here in Orange County, 52 in Sussex, Passaic 45. And the sale to ask ratio, this is what percentage of homes that are currently listed actually sell for above asking, right? And It's remarkable how for almost 6 years in a row, that ratio has been at 99 point something percent or over 100%. I mean, it's really remarkable how little room buyers have had to negotiate. It's kind of wild, really, when you think about it. And it's been years of that time. But more and more negotiations are coming back into it, and sellers are forced to be much more discerning with their asking price, for sure. So this is interesting, right? Because I always love to compare against 2019. So I think that this is a really great graphic here that shows us, although we're increasing on the left side on a year-over-year basis, right? We're still way below pre-pandemic levels, right? 2019, it was a great year. You know, there was no pandemic. There was no threat of a pandemic. You know, the economy was cooking. Real estate was really coming out of a nasty downturn that lasted almost a decade. And it was really kind of firing on all cylinders. There was inventory for buyers to look at. There was negotiations taking place. It was a really solid market. And then the pandemic hit, right? So 2019 is kind of the target where we got to get back to, but we are still way below those numbers. On an average of all three, almost 40%. So we've got a long way to go to try to get back to any sort of normalcy. Still not there. April of 26 versus April of 25. You can see here the new listings are in the blue. The units sold also are in the same color, but just offset to the right. So you can see that, you know, new listings are up. Units are down. Just another way to look at the data to, you know, get the point across that, you know, at some point things should pick up, right? Because if there's more inventory for buyers to look at, pricing comes down a little bit. It should bring buyers off the fence, which will get the transactions rolling. And hopefully, this is why I believe we're not going to see a sharp crash, a sharp decline in price. But I do think we're going to see a fairly long sustained plateauing or decline of price, because it's just what I've seen over the last 21 years of being in this industry and watching numbers. The prices do not change like the stock market. They don't go up and down every day. They're long turns and long cycles. So we've been on a very long upswing, and at some point we're going to be on a very long downswing. The question is, how hard is it going to fall and how fast is it going to fall? But I just think what we're going to see is a cooling off. I don't think we're going to see a major dip in price. Assets of real property assets. So what does this mean for buyers and sellers? Well, buyers have more listings, but their hesitation is real, and for good reasons. You know, AI is taking over jobs. There's a war in Iran. Oil prices are through the roof. There's a lot of reasons why buyers are scared, quite frankly, and confused and overwhelmed with things. Sellers, you have to price carefully. The market is listening. It has never been more important than to price your home just right now. You don't want to overprice. If you underprice, you'll be okay, because the market will make up for it. But what you want to do is you really want to work with your real estate agent, okay? I tend to think the best ones are at Better Homes and Gardens Green Team, so try to hire one of those. But if you don't, just listen to them anyway, and try to really dig into the numbers and understand what truly the market value is. It's not what you think the property's worth. It's what the market thinks it's worth. You have to listen to the market. So try to list your home at or slightly below market value. It's the best tip you could ever get. It's going to help you make more money. Don't overprice your listing. Uncertainty, like I said before, Iran, fuel prices, AI-driven market anxiety, you know, just all of this stuff going on. And there's just a lot of questions and discontent out there. But like this says here, right? Silver lining, demand is still here. There's no doubt about it. You know, Rocket reported record pre-approval levels. You know, buyers are preparing. They're just being cautious, and for good reason, right? It's smart. It's a huge purchase. You want to make sure you do it right. You want to make sure you don't make a mistake. Okay, Amy Green, are you there? Can you hear me?
Can you hear me?
I can. Welcome aboard. How you doing?
Good, thanks.
So we've got 3 points to talk about as it relates to mortgage lending. Rates are elevated, but not historically so. Correct?
Correct. Yes. Still a good time to buy.
So we talked about it last month as far as locking versus when to lock and marrying the home, not the rate. Marry the house, date the rate. Still true. Thoughts on that?
So I would say at this time, due to all the geopolitical winds that are blowing and, for instance, the Iran war, I would say, again, it's always up to the buyer when they want to lock. It's their choice. However, I will say that there is more risk to the upside of rates going up versus them coming down. So I would say it's a smart thing to lock up front. And again, it's the buyer's choice.
Mm-hmm. So as we stand today, right now, it's probably not a bad idea in general to lock, because in general the market is signaling that rates are gonna go up in the longer term, not necessarily down.
Yes, there's a lot of risk right now to the upside.
Yep, fair enough. All right, and then affordability is the problem, right? It's been a big problem now for years. It's no secret. Down payment assistance, first-time home buyer programs. What's going on for those types of people that are at that income level and economic level?
So there are definitely DPA, meaning down payment assistance programs in New Jersey. It's called New Jersey Housing Mortgage Finance Authority. Basically, a little blurb about that. They offer anywhere from 10 to 15,000 for DPA. It's basically an interest-free 5-year forgivable second loan that requires no monthly payments, provided the borrower remains in the home for 5 years. So I do have access to New Jersey DPA programs. You also have FHA is always a great option, 3.5% down. Conventionally, you can even put 3% down depending on your income. If you fall within certain guidelines, you could do 3% unconventional. And then there's always the option of a USDA loan, which is 0% down.
Yeah.
And Sussex County and Orange County are very USDA friendly, like it's like USDA territory. So that's always a good option, the USDA loan. And then I will say in New York, there's also Sony Mae, and that is the state of New York Mortgage Authority. And they offer, I think 20 to 30,000 or something like that in DPA. I usually refer Sony Mae borrowers directly to Sony Mae because you have to be like linked in with them somehow. So, but that's always an option. And if I think people qualify and they could benefit from it, I'm happy to advise them on how to go about that as well.
Yeah, good stuff. So there are programs out there that people can go after if need be. Good stuff. All right, thanks for checking in, Amy. We're going to continue forward here and finish this out. So 5 things to know about the market here in May. Well, the spring market is underperforming and it may not recover in 2026. Just is what it is. The transactions that have been lost just we may not realize them in 2026. Inventory is rising, but context matters, right? New listings are up, but we still are way down, almost 40% by pre-pandemic levels. Prices are still holding for now, right? We talked about how it's an impossibility for the number of new listings to continue to increase and the number of transactions decreasing for price to continue to increase. That's an impossibility, right? Regular market forces will eventually tip the scales on that and send it back. But right now, prices are holding. I also don't expect to see a major downturn in pricing like we did in 2007 and 8 and 9 and 10, where the price just fell off the shelf. And because at that point in time, you have to have historical perspective, right? We had the subprime mortgage crisis. There were more homes than people could live in and afford and all those sorts of things. And we're not there right now. Uncertainty is the real headwind. Talked about it. Iran, fuel, inflation, AI, all sorts of things that are just disturbing people, making it hard to make a decision. And, pent up demand is real. Record pre-approval letters are there. So maybe we will see, a makeup of 2026, the loss of the transactions that we had in the spring market. Maybe we will see it if rates come down. Somehow the markets push rates down. Well, that might get buyers off the sideline and it might get them buying. And all of a sudden we're going to see a big push in the summer or the fall. It may happen. But like Amy had just said, there's more risk to the upside on rates right now, meaning that rates are probably going to hold where they are or maybe climb a little bit higher as the year goes on. Okay, so thank you for joining us. As always, try to follow us. Please follow us on YouTube. You can get there straight to the playlist for the housing market update by going hmupdate.com. It'll bring you right there, and then you just got to hit the follow button. And then you get this video notified to you every month so you don't miss it. Thanks for joining in, and we'll see you next month in June.